Stocks trade ranged ahead of Christmas with several overseas markets, including the US, set to shut sessions early. Energy and realties clock some gains, even as metals and financials lose ground.
The rupee drifts lower, hitting a new record low of 85.18 to the dollar, buying by oil importers, even as the RBI is yet to step in, according to dealers. The pressure on the rupee was expected due to the rise in the dollar index and an expected month-end dollar buying back home.
The Telecom Regulatory Authority of India has recommended giving prepaid customers the option of buying only voice or SMS packs and extending pack validity to from 90 to 365 days. Such a move by telcos could lead to some down trading, is the fear among the industry.
Network 18's Money Control reports that Tata Capital is likely to float a 15,000 crore rupee IPO in 2025 to meet RBI's upper layer NBFC norms. The stocks of stakeholders Tata Investment and Tata Motors perk up on the news.
Whirlpool inks a deal with PG Electroplast to source select washing machines. The deal is positive for the EMS player and likely offers cost benefits to Whirlpool besides giving it a Make in India croaking rights. Both stocks gain.
Good afternoon. You're with us here on Halftime Report on CNBC-TV18. I'm Hormas Patakia. With me is Surabhi Upadhyay, and the 200 DMA continues to prove to be a headache for the bulls as of now. Well, it's Friday. It's a holiday. It's the holiday cheer. We're heading into a midweek holiday, and the bulls would definitely be hoping that we do end up above that 200 DMA mark of 23,841. Currently at 23,814 is where the Nifty lies, slightly off the highest point of the day. What's doing well, though, in today's trading session are a lot of these FMCG names like ITC. Mahindra & Mahindra is doing well. Tata Motors is doing well. We'll get to that Tata Group in just a bit. But a lot of on the downside, though, it's HDFC Bank and JSW Steel. Not many. It's pretty quiet as of now for the benchmark index, but that 200 DMA is the important level to watch out for, Surabhi.
Oh, absolutely. So it's very stock specific. I mean, the moves today, volumes are thin as one would imagine and expect. I'll just read out some more interesting movers from the broader market. Look at Amber Enterprises. Remember, Amber was up around 12-13% yesterday, and it's perked up again today. Its peer company, PG Electroplast, is the one that got that order from Whirlpool, but there's a hectic buying on Amber as well. Some of the foreign brokers are expecting a new policy to come in, a new form of PLI to come in, giving benefits of up to 40,000 crores to the sector. So some of this chatter seems to be keeping Amber excited. There's Sagility, where there are more positive brokerage notes coming through, and some of them from foreign brokers as well. Stocks up about 5%. And then you have some names like Hindustan Copper, MRPL. They're managing to find good ground as well. The only problem or the downside in the market today is that banks are not quite playing ball. In fact, the bank Nifty is right now lower by almost 80 points. Speaking of banks and financials, actually, let's look at the money markets, where the rupee has been making all kinds of headlines. In fact, it has continued to drift even lower today. It hit a fresh low of 85.18. There is, of course, the international resurgence in the dollar, and there's been some dollar buying by importers as well. Let's actually go across to Lata to understand what's driving such downside pressure on the currency. Lata.
Yes, actually, you summed it up very well. The dollar has actually moved higher to over 108. The overnight number was 107.71, and thanks to that, pressure was expected. The rupee has drifted. Actually, what was startling, or what is startling about today's move, is that it's drifted straight away to that 85, almost 85.2 mark. It is 85.18. Normally, you would see a 5 paise move and then the Reserve Bank come in. But today, it appears the Reserve Bank hasn't yet stepped in, but bankers emphasize the word yet, because it could come at a round figure of 85.2. We don't know. In any case, this is also a holiday-thinned trading session. And there isn't so much of flows from the FII side. The dollar buying, as we noted, was largely because oil importers usually buy dollars for month-end payment of bills. And that's what has pushed the dollar, made the dollar more expensive. No one's talking of any technical levels. Some polls have been done in the market, and people are expecting the first support level for the rupee at 85.2. There are some from other, public sector bankers who expect the rupee support to come in at 85.25. But, well, these are just standard expectations, lines in the sand. The rupee will drift lower as long as you don't see FII flows or other kinds of flows in, and as long as you continue to see the dollar perk up.
Okay, all right, Lata, thank you very much for that. So we'll keep an eye out on the currency and let's see if indeed it hits that level of 85.20. So that's what we have going right now. Actually, this fall in the rupee, it's not having too much of an impact on some of the IT stocks. Let's pull up some of the biggies like TCS. There's about a 0.5% gain, so it's not bad. Infosys also very minor, about a 3 rupee rise on Infosys is what you're getting. There is IndusInd, so beg your pardon, there is Tech Mahindra, which is managing about a 5 rupee gain. So the gains, Hormaz, are not extraordinary, because I think it's a lot more than just the currency's weakness, which kind of gets offset with hedges as well. It's going to be more about the commentary that they get from some of their large US clients.
Issues of their own as well, right? And we are heading down to earnings season as well. So the commentary from these companies will be very important to watch out for.
I must put on board, since we were talking currencies, we were speaking with some of the IT analysts earlier, and many of them actually point out that while the rupee is weakening, it's cross-currency movements, and because of cross-currency issues in the quarter that's closing, Q3, there could be an impact of almost 1% on earnings for the sector as a whole, because of the way a lot of different currencies have moved vis-a-vis the dollar.
That tells you why there is no significant impact, right, on this. Interesting moves, then we'll keep an eye out on all of this. But it's time to take a short break. But before we do that, it's time for Growth Code, a special initiative by Grow and CNBC-TV18 to further empower retail investors and traders. Renowned investors and professional traders convened at Grow's Trading Right event on the 9th of November, where they shared valuable strategies. Here are some key insights from Arjun Tandon, the partner at Tata Capital Advisors, on how to determine your capital requirements.
एक एक्सपेक्टेशन सेट करना ज़रूरी है कि मुझे ट्रेडिंग से इतनी इनकम चाहिए. सो व्हाट इज़ योर फाइनेंशियल गोल? आप क्या चाहते हो कि मेरी मंथली इनकम ट्रेडिंग से कितनी हो, एंड दैट विल डिसाइड योर कैपिटल. सो लेट अस से कि आप कहते हो कि मैं ना 1% रिटर्न तो बना सकती हूँ या बना सकता हूँ. सो योर कैपिटल, अगर आपको मंथली इनकम 50,000 रुपए की चाहिए, योर कैपिटल विल बी 50 lakhs. अगर आपको लगता है कि आप 2% रिटर्न बना लोगे, देन योर कैपिटल रिक्वायरमेंट इज 25 लाख. एंड सिमिलरली, अगर आपको लग रहा है कि मेरी एक्सपर्टीज बहुत ज़्यादा है, मैंने कुछ क्रैक कर लिया है रिलेटेड टू ट्रेडिंग, आई हैव सम सेटअप्स जहाँ पे बहुत अच्छी रिटर्न्स आ सकती हैं, सो ऑन अ 5% रिटर्न एक्सपेक्टेशन आपको सिर्फ 10 लाख रुपए चाहिए.
Welcome back. Let's move to another story that's coming in from Money Control, and this is one that's really moving stocks today in the market. Sources are telling Money Control that Tata Capital, the flagship financial services arm of the Tata Group, is looking to list. It could be a big bang listing as well, as much as 15,000 crore rupees. Let's straight away go across to Ashwin, who's been breaking that exclusive story. Ashwin, so this is getting the market excited. I mean, stocks like Tata Investment, etc., are all higher. Noting this news, what exactly are you picking up?
Good afternoon. So this is a story that was broken last evening on Money Control, and what I'm picking up from my sources is that Tata Capital, which is a subsidiary of Tata Sons, the holding company of the Tata Group, and also the financial services flagship of the diversified conglomerate, is in fact looking at an IPO in 2025. Work has begun, and the entire IPO process for a big bang listing has been initiated. That's what sources are telling me. 2 advisors have been roped in as of now: investment bank Kotak Mahindra Capital and law firm Cyril Amarchand Mangaldas. More advisors may also come on board at a later stage as and when required. This is going to be a really, really big issue. It is expected to be in excess of 15,000 crore rupees, and it's also likely to be a combination of both primary and secondary issuance of shares. Now, what is the trigger? The trigger, according to sources, is the fact that RBI has made it mandatory for all NBFCs that fall in the upper layer list to mandatorily list by September 2025. So the clock is ticking for the Tata Group. September 2025 is the deadline for NBFCs like them to get listed on the domestic bourses, and that is why this process has been initiated. If one looks at Tata Capital, it had an AUM of around 1,58,000 crore rupees as of March. If one looks at the shareholding of Tata Sons, the holding company, it's around 92% stake. Some other additional stake is also held by Tata Group companies and the trust. Also, don't forget that Tata Motors Finance, that is also an entity that is going to be merged with Tata Capital. So it's going to be a beefed up entity before the IPO. Let's keep a close watch on it in the new calendar year. A big one coming in from Bombay House.
That explains the move in a lot of these Tata Group companies, right? Ashwin, thanks a lot for that news break. And Tata Investment, Tata Motors, Tata Chemicals, all of these stocks are surging on the back of this news break by Money Control. But from one news break to another, and Amber Enterprises already was having a good year of 2024. And what has made this an even better year now is this news break from Sudarshan. He's joining in with the exclusive details that has led to this 7.5% up move in the stock. Sudarshan.
So Amber Enterprises has three business divisions. One is consumer durables, second is electronics, and another is railway subsystem. So what we understand from sources that Amber Enterprises now looking to demerge its electronics division, and post the demerger is completed, it will bring an IPO. And also sources indicate that bankers are already appointed for this purpose. Now talking about the valuation front, Amber Enterprises FY26 estimated PE is 54 times, and now if you compare peer-to-peer, Dixon's FY26 estimated PE is 99 times. And on the stock front, in 2024, Amber has given stock returns that positive returns of almost 100%, while Dixon stock has surged almost 200%. CNBC-TV18 has sent the query to the management. Comments are still awaited. And talking specifically about the electronics division's performance, in FY24, it had formed 20% of its total revenue, company's revenue. But in Q2 FY25, revenue had almost doubled, and electronics division had formed almost 30% of total revenue. So obviously, Amber Enterprises will be in focus going ahead as well.
All right, Sudarshan, thanks a lot for that news break. 130% higher so far now is Amber Enterprises for the year. 74.35 now as we speak. But another good stock, another buzzing stock though in today's session is PG Electroplast, and that is after it entered into a contract manufacturing agreement with Whirlpool. And Upasna is joining in with more details on that. Upasna.
Well, certainly, PG Electroplast and Whirlpool have entered into a definitive agreement for contract manufacturing of select models of Whirlpool's semi-automatic washing machine. And under this arrangement, PG Electroplast will manufacture some of the SKUs for Whirlpool at its factory at Roorkee. Now, company has indicated that PG Electroplast is already an existing supplier of Whirlpool branded air conditioners, and both the companies have said that they will continue to evaluate potential expansion opportunities going forward as well. That's why this stock remains in focus today, surging higher in trade today.
PG Electroplast, it's been a multi-bagger, should be. At the start of 2021, the stock was at 14 rupees. Today's intraday high is well over 1,000.
It's been a phenomenal rise for all of these electronics manufacturing companies, Amber, PG Electroplast, a couple of the others, Keynes, etc. It's been an absolute dream run, with the government also supportive with PLI policies, and of course a lot of contracts happening from international MNCs like the one that PG has announced with Whirlpool. So big moves coming in today and over the year. We do have to take a very quick break. We will come back with a lot more on the markets in just a bit. We'll have our technical guest joining in and get you some trading calls. Welcome back. You're with us on Halftime Report. Well, let's quickly do a technical check on the market. What we've got going is a flat-looking screen, just about a 20-point up move on the Nifty. So there's not much moving. And the mid-cap index is very, very flat today. Even there, we're not getting too much of a gain. I think we've got our technical guest joining in now. So let's go across to him, Sachidanand Otekar of Trade Bull. Sachidanand, great to have you on the show as always. Very sideways market, and I guess it's slightly thin on volumes as well. Let's talk about the index. Any trades, Nifty, Bank Nifty?
Good afternoon, Surbi. Good afternoon, Hormuz. I think the market may see this lackluster action within the indices for the next couple of trading sessions. But if you look at the overall development, I think 23,700 support is something which will be critical for today. And on the higher side, until unless we don't see a closing above the 5-day exponential moving average, which is placed somewhere close to around 23,890, we may not see a immediate spurt when it comes to Nifty. Nifty Bank also is indicating a kind of a range-bound movement itself. We have very strong support somewhere close to around 51,000 level. And on the higher side, 51,350, 51,500 look like resistance. So probably we may see this sideways consolidation getting continued or getting carried forward for the final day of this particular series as well.
And what about specific stocks then, Sachidanand, this afternoon?
Well, almost what we have identified is stocks which were relatively weak and which have started, showing signs of, positive divergence. Plus, in the last couple of trading sessions, there are signs of good short covering moves. So the first stock which has hit our radar, which we have also recommended to our clients, is ITC. Now, after almost falling for 12 consecutive weeks, the stock is showing a very stable base near its 200-day exponential moving average. It is a kind of a double bottom formation which needs a confirmation close above that 495 mark. If you look at the overall structure, there's a good bullish crossover on its 5 and 20 exponential moving averages, indicating that there could be fresh momentum in the offing. So we are expecting that this particular move may unfold towards 505 eventually. And that's why we are recommending building fresh long positions here in ITC January futures. The stop loss for the trade should be placed at around 470 on a closing basis. We may see an immediate swing towards 488, but eventually we see this particular rally unfolding on towards 505. The other stock which has hit our radar on the bullish side, which was primarily in a very strong negative trend, is Bharat Forge. Now, after almost 25 weeks of a declining move, for the last 3 weeks, we have seen a good, strong, positive divergence even on its weekly scale. Now, if you look at the overall structure, the stock has been trending below its 200-day exponential moving average, which is placed at around 1460. But the way the data is shaping up, 1300, 1340 looks like a very confident range, and we may see a good, strong breakout coming soon in this particular stock. And that's why we are recommending building long positions. The immediate target could be around 1420, but eventually we see this stock scaling towards 1460. And that's why we are recommending building fresh long positions in January futures. From a position perspective, the stop loss should be placed at 1288.
All right, Sachidanand, thank you so much for sparing time joining us today with your views on the index and specific stocks as well, ITC and Bharat Forge, the two recommendations there from Sachidanand. But as we slip into a short break, here is some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. And you can get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app now from the Apple Store or the Google Play Store right away. Back with us here on Halftime Report. The Nifty has given up almost all the gains that it had since the morning. It was a smart recovery from the lows of the day, but it seems as if we are heading back to that territory. Almost at the flat line now is the index 23,780, and yet again that 200-day moving average proving to be a very, very strong barrier for the index to cross. But on to our series of year-enders, and we are putting the spotlight today on the microfinance sector, and it witnessed pain in this year, and that is expected to continue in 2025 as well. Now, what are the key factors and pain points for the sector, and how will things pan out in the upcoming year? Abhishek is here with more details on that.
Rural economy came under great pressure during the large part of CY 2024, that is calendar year 2024, especially in the microfinance segment. The sector is expected to see pain in its business going into 2025 as well. Let's take a look at the numbers. So AUM growth, that is asset under management growth, which was at 26% YOY last year, that is in 2023, has declined to less than 9.5% growth year on year this year so far. So growth is expected to further slow down as lenders battle various issues ranging from over-leveraging of customers to credit costs to asset quality pain, etc. So the biggest impact has been seen for Spandana Spurti, ESAF SFB and Credit Access Grameen in 2023. All the lenders saw improvement in their asset quality, but in 2024, ex of Satin Credit Care, all of them witnessed huge pain in their asset quality. Highest pain was seen in Fusion Finance. Amount-wise, these lenders saw gross NPA decline by 32% in 2023, and then it rose by 79% in calendar year 2024 so far. Massive rise was seen for Fusion Finance, Spandana Spurti and Credit Access Grameen. They saw their stock price and valuations also decline due to lowering of growth and deterioration in the asset quality. Now, highest decline in valuations on a one-year forward price to book value has been for Credit Access Grameen, Fusion Finance and Equita Small Finance Bank. Marginal improvement was seen in lower valuations of Ujjivan Small Finance Bank and Utkarsh Small Finance Bank, the underperforming Nifty this year so far. On year-on-year basis, while Nifty has given a return of 17.3%, these lenders have given negative return ranging from as low as 5% to as high as more than 67%. So from 52-week high, if you take a look, Nifty has given a negative return of almost 7%, while these lenders have given negative returns ranging from as low as 31% to as high as 73%. Highest negative return is from Fusion Finance, followed by Spandana Spurti and then Credit Access Grameen. Let's look at the outlook for 2025 given by ICRA on this sector. Stricter lending norms for microfinance shall improve the credit safeguards, but will pose challenges to near-term outperformance or the performance of the sector. Borrower rejection rates are projected to increase significantly as over 20% of the borrowers are expected to be impacted by the new guardrails set by MFIN. Now, NBFC MFI's AUM growth will compress to 0 to 5% growth in FY25 from 29% that they had in FY24. Credit cost is expected to be at a high range of 5.4% to 5.6% for FY25, which along with margins is expected to compress the overall profitability of the sector. The sector has challenges stemming from over-leveraging of their borrowers, socio-political disruption, as well as operational challenges largely related to the high employee attrition seen over here. There is significant downside risk to the near-term loan quality of the sector. ROA or return on asset can decline massively for the lenders in large part of 2025. They are strongly capitalized. Hence, incremental capital requirement for loan growth will be lower due to expectation of slowdown in the overall loan growth of the sector.
Abhishek, thanks a lot for that. And earlier today, we spoke to Alok Mishra, the CEO and Director of the Microfinance Industry Network, and Aishwarya Khandelwal, the Associate Director at India Ratings and Research, to discuss the latest trends from the sector. Listen into excerpts from that conversation.
And what I get to hear is that December is better than November, and later half of November was better than the earlier part of November. So I see signs of stability there. But I would be able to say that only when I get the credit bureau numbers of December. But the field situation seems to be improving, and especially in December. There is a common perception that people are saying that we are drying out the liquidity. We are not drying out the liquidity. It impacts only 7 to 8% total customers. And there also, if they reduce their leverage, which is good for them, they can again get fresh credit.
Q3 is expected in terms of the delinquencies. Q3 is expected to be the peak in terms of the delinquencies. In terms of the normalcy, if we talk about Q4, we could see some improvement in the collection efficiencies, but getting back to the normalcy, normal collection efficiencies going back to the March 24 levels, I think that's a prolonged time. We would see another 2-3 quarters or so when we could see the collection efficiencies getting back to the March 24 levels. So we see a prolonged recovery in terms of the collection efficiencies.
Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. Welcome back. And Ola is set to launch its 10-minute food delivery Ola Dash. Now, Kapish Malhotra, the commerce head at Ola Consumer, says that the company will launch Dash across all cities. Now, in conversation with Shilpa Ranipeta, he also spoke about the 10-minute food delivery service and more on that. Listen in.
We at Ola, given our heritage of mobility, are one of the largest last-mile logistics players in the country today. Right, we have one of the largest two-wheeler fleets in the country, and using that strength and using our strength of knowing our consumer base very, very well through our consumer app, we can marry these two and provide a very quick and affordable service for the consumers for the food items. And these are most items are quick preparation items, which is snacks, tea, ice creams, QSR meals, right? For our restaurant partners. And the real innovation here is quick logistics, right? That's really the key project that we are running in Ola Dash, right? And that is something we have been able to do very, very well. It's very early right now, but we are seeing a great response from our consumers. Rather, almost 10% of our food orders now are coming via the Dash orders.
So you're going to maintain a 1 kilometer radius. Is that what the plan is?
Yeah, right now we are working with a 1 kilometer delivery radius, right? And we can do that given we have very high demand density from the consumer side and we have very high supply density from our driver partner side, right? So we are able to do that in a 1 kilometer radius, right? And because we want to keep the promise of 10 minutes for the customers, hence we are doing it in a shorter radius than I think most other players.
Talk to me about the expansion now. You started piloting it in Bangalore. Now, are you going to be launching it nationwide also?
Yes, sure. So we have already launched our food delivery services pan-India. We are present right now in 100 cities pan-India, and we will very soon be launching the Dash service, which we are piloting right now in Bangalore, across all the cities as well.
Right, let's talk about the food delivery business. That's something that you also started piloting in Bangalore, I think around August. So as things stand, can you run me through how the growth has been of the food delivery business? How much of a share on ONDC do you think you have captured? And also, if you compare it to the incumbents within Bangalore, what's the share that you've captured for food delivery?
We have reached a scale of almost 20% the size of incumbents in Bangalore market. Right, we have captured a 10% market share. And that's only in Bangalore. And this week, we have launched our services pan-India. We have seen great response from our consumers, from our restaurant partners, and of course, the delivery partners. And specifically also because we are doing our entire food delivery business on ONDC. We are fully committed to the ONDC open network philosophy. Right, and which essentially means much better pricing for the consumers, much better commission structures for the restaurants, and enabling this entire ecosystem via our logistics services, which is scale, efficient, and affordable for our restaurant partners. Right, being able to structurally reduce cost in the overall food delivery ecosystem, which has enabled us to provide this experience both to our consumers and merchants. So we have seen a very quick growth in Bangalore market, basis which we are convinced on being able to service a much larger pie and scale this pan-India, which, we have done this week.
Let's talk about your quick commerce plans also. You piloted grocery also in Bangalore on the ONDC network, right? So going forward, have you already expanded into other categories? Will you also look at more categories? And is there a pan-India expansion plan for the quick commerce business also?
Sure. So I think, along with, and we are working very closely with ONDC to shape the future of digital commerce in some of these newer categories. We went live with grocery in Bangalore again around August and September. And we have seen great response from the consumers as well as the merchants, right? And that's something, again, we plan to replicate that Bangalore success pan-India, which we will be doing very soon. I, again, can't give you an exact date today, but, we plan to launch grocery pan-India as well, right? Speaking of other categories into the quick commerce domain, we are actively working with our merchant partners and adding categories, almost on a daily basis, right? We have within grocery itself, we started with fresh and staples, but we have entered into FMCG categories as well. And very soon we will be entering the D2C brand store categories as well, which captures a large part of the beauty, personal care, kind of markets. And we also plan to launch fashion and electronics categories very soon, along with ONDC.
10-minute food deliveries on the annual. And time for a short break here on Halftime Report. More on the other side. Stay tuned.
Welcome back. Joining us on the show now is Himanshu Agarwal. He is Director Satyam Balaji. Himanshu, thank you for joining us. And to rice, and I was looking at the numbers, and the rice reserves in India on 1st of December were 44 million tons versus government target of 7.6. And then we are looking at a good crop as well. What's your sense on the rice as supplies that we have, the domestic demand, the kind of export numbers that you are envisioning?
So basically, yes, we see a record production this year. I mean, we're looking at about 137 to 138 million metric tons is what India is expected to produce. And government is very wary of the fact that they're sitting on a very high stock. Hence, we see the government buying hasn't been that aggressive as we have seen in the last couple of years. It's slightly reluctant in taking big numbers because there is storage issue. There are other issues that eventually they would face. So supply side, there's no concern. Domestic demand, I would, in a way, I would say that there's big numbers available in the market in terms of inventories. And with, so much such a lucrative MSP and bonus in certain states, everybody is more than happy to give the rice. And internationally also, the market cannot sustain these levels. Unfortunately, we do not have we're not in a big bull run of rice trade internationally, wherein we can sell the rice at our own prices. So, yeah, I mean, there is a challenge. There is definitely no equilibrium as of today in terms of supply and demand.
Himanshu, we do understand that after India opened up its exports, the international markets have only been declining. I mean, 10 to 15% since September until now. And I do understand that Indian rice is the cheapest or most competitive into the international markets right now. So what are the numbers that you're looking to do in sense of exports this time?
Honestly, I would slightly disagree on that front, that the Indian price is not cheapest internationally right now. We are facing very stiff competition from the likes of Pakistan, Myanmar, Vietnam on certain commodities, and even Thailand, which is our biggest competitor. So it's not that India prices are the most competitive as of now, but yes, we are getting back our lost share of trade. So yeah, that's where we are. So prices have declined from 550 to 430. Yeah, I mean, we are still not very competitive. I mean, we still, for India, we were trading parboiled at 350 before duty came in, and today we are at 440. So we are still about 25% higher to the lowest we have seen.
And what's your sense on the exports then? I mean, as you said, there is good crop. And I mean, I was reading some reports that Thailand and Pakistan crop has been good as well this time around, even Myanmar for that matter. So where does India stand in the export market, and what are the kind of numbers that we could be doing?
We expect, I mean, now in next 2025, we should at least hit 17 to 18 million tons of export, given because there's still one commodity which is not openly allowed to export, which is broken rice. So we are constantly in talks with government to understand how exactly do they see, allowing that to go because it's still on quota system and still routed through NCL. So that's about 3 million tons of additional export we can look into if government decides to ease on broken rice. So 17 million if the broken rice is still restricted, and we can hit 20 million if broken rice is also allowed to be exported the way it was 2-3 years ago.
Himanshu, how would you also look at the pricing part of it in the coming year now? I mean, we've seen a volatile year, mostly depressed, but yes, since the prices have started moving, how are you looking at 2025 in sense of year? And how would you also react to various reports suggesting that with the kind of returns that maize farmers got, that could eat into some of the rice area?
So yes, I mean, all indications show that we are in for a bit of a bear run, but then again, that's when the market surprises you when everything indicates in one direction. That's where the market surprises you because there is an ample amount of supply available. The prices are not very competitive internationally. India is not the only one offering rice. There are many countries offering rice. So yes, we should see some correction in prices, which we have already seen after duty has been removed. But yeah, I mean, maize, again, India used to export maize in good numbers, but that's not the case. I mean, we would see maize harvest going up in India in next couple of years because of support on ethanol front and also the returns that the people have gotten on maize. So yes, they would eventually eat into rice, but for this cycle, I mean, all of this would be for the next cycle, but for this cycle, I expect some price correction down the line.
Himanshu, also when it comes to Indian markets, have the trends changed at all? I mean, we do understand that millets is making a bit of an inroads right now. There's healthy eating. Is rice demand growth as it has been in the previous years?
Unfortunately, in terms about millets and all of this, these are still luxury in terms of Indian market is concerned. I mean, we are still a country where the majority are, fighting it out for basic necessities. So rice demand per se, I don't see a lot of challenge going on that front because it's a very, very niche criteria which is going into millets or other grains. But in demand-wise, I don't see any change, at least in short term. Maybe in long term, we don't know how exactly market would react. And now with the RII and all of these institutes working out on different rice DNAs and rice structure, wherein the GI index would come out, will be very lower significant, in terms of seed manufacturing. So we would see low GI rice coming into the market real soon. And a lot of work is going on branding of those rice as well. So I don't think rice being a staple has any challenge in long run.
Indeed. All right, Himanshu, thank you so much for joining in and sharing with us your views on this space going ahead. Manisha, thanks a lot for joining in as well. But with that, it's a wrap on this edition of Halftime Report. From me and the team that put this show together, thank you so much for watching. Business Lunch up next.